Indonesia, tax law reform has become a key agenda for the government to increase state revenue, create a fair taxation system, and encourage taxpayer compliance. This reform is usually carried out continuously and touches on various aspects, ranging from regulations and administration to technology systems. Background and objectives of tax law reform. Tax law reform in Indonesia is driven by several key factors and aims to achieve several things. Increasing state revenue. Taxes are the state's largest source of income. The reform aims to optimize existing tax potential and reduce revenue leakage. Creating fairness. A fair tax system will impose a proportional tax burden in accordance with the economic capacity of taxpayers, so that it does not burden certain parties. Improving tax compliance. With a simpler, more transparent, and more accessible system, it is hoped that the public will be more compliant in fulfilling their tax obligations. Following global standards. In line with global economic changes, tax reform is also necessary to align Indonesia's tax system with international standards, such as in the prevention of tax avoidance and the exchange of financial information. Encouraging investment and economic growth. Investment-friendly tax policies, such as tax incentives, are expected to attract investors and encourage economic growth. Key pillars of tax law reform. Tax law reform in Indonesia often focuses on three key pillars. 1. Policy reform regulation. This pillar focuses on changes to tax laws and regulations. Some important examples of policy reform are Tax Regulation Harmonization Law, UHPP. This is one of the most significant reforms in recent years. The UHPP integrates several previous tax laws, such as the Income Tax Law, PPH, and the Value-Added Tax Law, PPN, and introduces several new policies such as an increase in the VAT rate from 10% to 11% and a further increase to 12%. The Voluntary Disclosure Program, PPS, or Tax Amnesty Phase 2, which provides taxpayers with the opportunity to report previously undisclosed assets. Carbon tax. As a form of Indonesia's commitment to environmental issues. Tax rate changes. Adjustments to personal income tax rates, particularly with the addition of tax brackets, to create greater fairness. 2. Administrative and organizational reform. This pillar focuses on internal improvements within the Directorate General of Taxes, DGT, to make it more efficient and modern. Examples include digitization of tax services, development of technology-based taxation systems, such as e-filing, online tax return filing that makes it easier for taxpayers, e-invoicing, use of electronic tax invoices to control VAT,